Welcome to the channel. Today's date is February 10th, 2025, and we're going to talk about a trade that we made last week and why we made that trade. Let's get straight into it. Hey, before we go into the trade that we made, we first want to talk about a big mistake that we made. As y'all know, I'm very super bearish on the market. I'm really worried about the stock market at this time. I believe things are completely overvalued. I believe that there's speculation running rampant. I mean, investing in things that I think, I wouldn't even call them investing. I would call it speculation, buying things that, and people are basically buying things because they go up. I don't think there's a lot of good analysis going on in the market. And what we try to do on this channel, we want to make good long-term investors and how you can generate some income. So the big mistake that we made, and this is because that we're bears, we sold Meta. And Meta is a stock that we bought, at the downloads of 2022, October 2022. Meta was going through some difficulties with Apple and their platform and not being able to trace people again. Meta had went as low as 90 something dollars. I think it hit $89 one day, but we started buying probably at like 250 because it was coming down from like 374. So we started buying at 250 and we kept buying all the way down to where we made some purchases in the 90s. It was a really big investment for us. We was real excited about Meta, and we're still excited about Meta. But as we said, we're worried about what the stock market is doing right now and all the speculation that is going on right now. And in my 30 years of investing, to me, when you get times like this, it always goes bad. So we wanted to make sure that we put money in cash, mainly in T-bills, so that we could be ready for the downturn. But this one was a big mistake. So like I said, our lowest purchase, where we made the majority of our purchase, was below 100. So it was a really good investment. And we sold probably like in October, November of 2024, and we sold it around 525. And like I said, we like Meta. We still like Meta. We think Meta is a great company. We thought that if we sold one, we wanted to lock in all the profits we made. We're talking about, we was up like 200% on the stock. So we made really good money. And so we wanted to lock in that money and so that we could be prepared for the next cycle. But Meta did something that I didn't think it was going to do. I don't think it's out of the nifty, not the nifty 50, but out of the stocks they call it, Meta, Google, Microsoft. I still think that Meta is probably the most reasonably valued stock in that group, besides along with Google. But I think that Apple is completely overvalued. Microsoft is completely overvalued. I believe that Nvidia is completely overvalued. And Nvidia has a great future. But we did sell Meta, and as you can see on here, it's went all the way up to 714. So we missed out on probably 200 points in this. If I had to guess, it's probably going to go over 725. They're actually on like a 15-day up streak, and maybe it may slow down, maybe it not. I'm still thinking, I still think I'm going to be able to buy it below 525, because when you get a downturns get real ugly, and normally they don't care about when selling starts. They don't care about what they're selling, how they're selling. Most people are just trading on fear, and because you got so much speculation in the market, I think the downturn is going to be one of our worst downturns. I experienced 2000, which was really bad. It lasted about a year and a half before we hit the low. The Nasdaq was down over 75%. So I'm thinking, we're going to have something like that, which is why I got out of the way. That's basically, I said I got out of the way, and I want to make when companies are selling at reasonable prices, I'll come back in. But that was a big mistake that we made, and I we have wins, we have losses, and I just thought I would bring that to y'all attention. And Meta may keep going up. So what we did do, we've been a holder of AT&T for a long time, several years. Several years we held AT&T, and AT&T got as low, maybe about 2 years ago, it got as low as 13. It's now selling for 24.84. It's been doing decent since we sold it. We sold it in the 24s. But what we didn't like about AT&T, we looked at it as a bond yield, and we knew the stock not going to make a lot of movements, but so we decided to sell it because as you can see on here, the dividend is all the way down to 4.47, which is, and actually the 10-year yield is selling above that. So we didn't think that investors, if the market did come down, or investors wanted dividend income, because that's mainly what you can buy these two type stocks for, Verizon and AT&T. They don't move up very much. We still own our Verizon. It just wasn't as large as a position as AT&T, but we figured AT&T came from 13 up to 24. That's almost a double. We know that it's not going to move very much. And then the dividend yield wasn't paying that much anymore. And then one of the main important reasons, if you follow us a lot, we couldn't sell no options on this stock. I mean, if it's selling at 24.84 right now, I mean, if I sold the 25 strike for for Friday, which I wouldn't do, they're not even going to hardly give you any money because ain't nobody looking at the upside. And we like to have the availability to sell options to increase our income, because if you use options properly, and that's basically selling covered calls, you more than likely can make more during that 3 month period than what the dividend is going to pay you. So we like to have it, so it basically doubles our income. So we like to have the opportunity to sell options. So what we did do, we sold our AT&T and we decided to go into UPS. So we took a decent, nice position in UPS. I got to be completely honest with you. I'm a little worried when the downturn do come, how much pain I'm going to have to pay with UPS. UPS is going through a lot of problems. And the stock really tanked about 2 weeks ago when they announced their earnings. Their earnings was pretty good, but what hurt them is they said they was cutting their largest customer by 50%. As I dug into the information and the material, I actually like this move that UPS did. And UPS probably went from like that day, probably from like 130 something all the way down to like 113 when we started purchasing our shares. So I really like the move. I think that the Amazon packages are not very profitable. They figure they can lesser shore some of their infrastructure, probably not have so many employees because they're getting rid of over half of their largest customers' business. And so that really what took the stock down. So we looked at this as an opportunity. And UPS has been going through problems for a while. That, as you know, they made a big deal with their employees, where the employees got really big wages, which that really hurt the stock a lot, I believe. And so we decided that this was a good time to start buying UPS. And we've been following UPS for a while. We think UPS is really cheap right now, and it's selling for 16.96. And this is on compressed earnings. And we believe that they're going to start growing their earnings. They've been cutting a lot of jobs lately. I'm sorry about that, but they've been having to cut a lot of jobs because they're aligning from the big boom that they had in COVID till now. So that's getting back in line. And we think that UPS is going to be able to get back in line. And we think they're actually going to be more profitable getting rid of some of this Amazon business. So as I said, I thought it was a good move. And plus the dividend, as you can see on here, is 5.73. And as I said, they're going to increase their earnings. Their earnings are going to increase. You can see on this screen that their earnings was 6.75. Their dividend is a 6.56. And normally that would be worry. Like, are their earnings going to keep dropping where they have to cut that dividend? But not only did they announce that they're going to keep paying their dividend, they also announced $1 billion stock buyback. So we think they have good flexibility. And this is a turnaround story. So we actually, not only did we increase our dividend yield, we also believe that we increased our upside in stock prices. But the main thing that we were getting from, one of the main things that we can get from UPS that we couldn't get from AT&T is that we can sell options against this. And we really like selling options. So what we're going to do is go through how we do our call options. As you can see, we have the UPS stock up here now. Here's a weekly one. We can sell weekly options against UPS, which we think can bring us in good income. The stock is at 114.36, above the price that we paid for it. And now we can come out and we can sell options. So like right now for this week alone, it's Monday, on February 10th. But this will allow us to sell options again. So we got a nice position in it, and we can actually sell options nice. And if we wanted to go with a little bit more risk, let's just, for example, let's just say if we had 1,000 shares of UPS, And that means we could sell 10 options against this weekly. We can bring in $150 a week just based on this trade, something that we couldn't do with AT&T. So basically, we think we got more upside because AT&T that had their run. UPS is a turnaround story. We actually UPS got a lot less debt than AT&T, and if AT&T, if bond yields keep rising, AT&T have to refinance some of that debt. That actually could be more expensive. The only risk is we thought AT&T would be a little bit more stable in a downturn, but it's a risk that we're willing to take. So as I said, not only will we be getting a higher yield at 5.57%, we also can bring in weekly income. And if we sold these once a week, at let's say at this price right here, and if we can get some stock move up, then we can actually bring in $600 extra a month off of selling options against this stock. That's why we thought it was a good move. I hope y'all like this information. If you did, please like, please follow, please forward. Good luck investing.